Did you know the greatest investors of all time, like Warren Buffett, Michael Burry, Donald Trump, and Ray Dalio, all have the knowledge of this 200-year cycle, and that they have made hundreds of millions of dollars from this alone? The very same cycle has predicted the dot-com bubble, GFC, and the COVID crash. In this video, I'll share with you what this cycle is, how it works, and what it says about the near future. Now before we start, to ensure you're in safe hands, I'll share a bit about me. I've had over 8 years of experience investing in stocks, crypto, and real estate, and I've made over $300,000 in the last 4 years alone using this cycle. This cycle is called the decade cycle that explains how the market moves in a 10-year period. This 10-year period prediction is so good, the most successful traders of all time used it to become the richest people in the world. For example, Dalio, Essen Gould, Yale Hirsch, and also Larry Williams. In case you don't know, Dalio actually made $50 million in the late 1800s from trading using many multiple systems, with this cycle playing a crucial part. Just a note, $50 million at this time would be hundreds of millions of dollars today adjusted for inflation. Now you might ask, why do these investors and traders use this cycle? It's because they have seen with their own eyes that every major financial crises or events repeat in a time pattern, and that they know that human behavior and credit cycles are predictable and do not change. So, how does this cycle really work? You can divide the decade cycle into two periods. Years ending in 1 to 4, typically experiencing moderate growth as the economy is often in recovery mode following a recession. Years from 5 onwards is actually more bullish, with big gains with fast and steep declines. Let's take a closer look and look at history year by year. If you look at the Dow back 100 years or so, recessions have typically begun in years ending in 0, with the stock markets typically having their bottoms in years ending in 1 or sometimes 2. More specifically, the first year of a decade often brings choppy or declining markets. So think of years like 1981, 1991, and 2001. But by the second year, markets tend to recover and strengthen. So years like 1982 and 1932. Now by year 3, markets usually enter a stronger growth. So for example, 1983, 1993, and continue rising into year number 4. Now year number 5 tends to be very bullish, followed by a sideways or upward trend in the year. So for example, year 6 and 7. Usually year 7 often marks a market peak, leading to a sharp downturn after. For example, 1907, 1937, 1987, 1997, and 2007. And after this decline, a rally usually occurs in years 8 and 9, before the cycle resets and declines in year 0. For example, during the 2008 global financial crisis, the US stock market declined throughout the whole year before bottoming in March 2009. If you want to see how this cycle has repeated again and again, take a look here for market performance from 1881 to 1960s. The same pattern appeared again and again. And when you look at the average performance by year of our full stock market history, we have this. Coincidence? I think not. This is a full display of how human behavior and credit cycles are predictable and do not change. Therefore, it's a useful system for us investors to reference when researching our investments and forecasting the near future. Which brings us to the last point. What is the probability of a 2027 top? Coming up soon. But before that, if you guys would like all insights and tips about real estate cycles, crypto, property, or stocks, make sure to subscribe to my newsletter channel in the description down below. So what is the probability of a 2027 top? Years ending in 7 have consistently shown to have the sharpest declines within the decade cycle. For example, 1937, markets peaked in March, followed by a 30% to 50% decline. 1966, a major stock market peak in February, leading to a 22% drop over 8 months. 1987, the market topped in August, where the Dow Jones plunged 22.8%. 2007, the final peak before the GFC, occurring in October. While 2025 is expected to be a stronger year, the market is approaching the peak of this cycle, and the following years show weaker growth. And not only that, this is in alignment with the land cycle and the commodity cycle having 2027 and 2026 as its peak. Therefore, it's safe to say that there's a high probability of a 2027 peak. However, overall, cycles do not guarantee outcomes, but they do provide a high probability insights. So as investors, we should always stay aware. Well, there you have it. Do let me know what you think about this whole issue in the comment section down below. And if you want further insights about the market of real estate, stocks or crypto and this cycle, make sure you subscribe to the channel because I will be revealing the rest very soon.